This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe. I'm going to give you a stock market update for Friday morning. So we've got some selling for the first time in a couple weeks now. We've got a decent down day. So let's interpret what that means. I'm going to talk to you about how I handle this type of a pullback to determine whether I think it's a buying opportunity or not. Let's go ahead and get into that. Now, if you want to learn some of these techniques, I would suggest going to rabilstockresearch.com/book. You can get more information on my ebook. Also, if you enjoy the content, please hit that like button and also subscribe. Okay, as always, I'm going to start from the bottom up. We're going to look at the sentiment here, and we've got a jump in the bullish sentiment this week. Went from 23% more bulls than bears up to 28%. Now, again, I've been talking about this for several weeks. I'm using the Investors Intelligence sentiment number, and it's the bull-bear spread. And we got pretty bullish up at the top up here. I think it was around 48, something like that. And we got bullish up here. It was around 49. So we look for these drops. I think it dropped down to about 26 or something like that here, and maybe, somewhere around 25. I mean, I'm just giving you ballpark numbers, but pretty significant drops off those peaks where people got a lot less bullish, and now we've seen the rally. Now I'm keeping it in the positive camp. It's probably a little bit more towards neutral now that we've turned, similar to what's taken place in the overbought, oversold oscillator. Using a 5 RSI on the weekly, it has moved all the way back up to 68. That was right at the close. So we're looking at a market that has recovered off the low. All right, now let me just go through these before I explain a few things. So we've still got volatility in the negative camp. Now, if you put the daily here, I wouldn't have a problem with that. I'll show you that in a minute. I'm keeping them there because it was basically very close. And the trend and momentum for the monthly and the weekly are both positive. The daily chart is neutral for the price pattern, and it is neutral for the momentum. All right, let's go ahead and start going through these in more detail, though. So we've got, first we'll start with the daily volatility. You can see how the 18 MA and the price of the average true range are essentially the same. So I just left it. If this drops down a little bit more where there's air, then I would put this into the neutral camp. All right. Now, by letter of the law, it is a few ticks below. If you put it in the neutral camp, I don't have a problem with that. But we are just watching the slope of the 18 MA. That's the key. If that continues to rise, then we still have increasing risk here. So that's what we want to keep a close eye on. On the weekly chart, this line was declining and has been rising, and this is pretty close to its highs. So we're looking at a lot of strength in the volatility on the weekly side of things. So these are big bars, all right? That's not really changing. Although this week is probably the smallest that we've seen in about 3 or 4 weeks, maybe even since the peak. But it's not having a material impact on the average true range at this point. So right now, I think we still have to look at these longer term plays having a little bit more risk in terms of volatility risk to them, where it's a little bit easier to get stopped out on a pullback or something like that. So you want to keep that in mind. Now, before I switch over, I do want to point something out. So the way I look at this is we want to use this 18 as a guiding tool. All right. And especially when we're looking at the short-term pattern of what is going on. So one of the things I look at is respect for the 18. So we get a pullback here, and we have a rising 18. We get a move slightly below. When we come back above a rising line like that, we certainly had respect for that on this pullback. I view that as a pretty bullish scenario. We come back here, look at this. We didn't even break it. We found support and respected it. Then we broke that line and we rallied up and failed at it. So we had respect to it for the downside now, right? But then we got really far away. And when we get really far away, we're looking for a rally. And then what we're looking for is to use the smaller time frame. I'm going to show you this in a second, but if we go down to the hourly, all that happened off the low is that it just went straight up. We never got an opposing trend signal back to the downside to trigger us in. So we're looking for a shorting play here because of the strength to the downside and the fact that we had the 18 turning down and we were below the 18 week, right? But that never materialized. And then we make this monster move to the upside and take out this high. And if you notice, this is a pretty key level right here, right around 550 on the spider. We made a peak there. We made a bottom there. We overran it a little bit here, but right in this ballpark of 550. So if we can come down to that area, we might overrun it a little bit. If we find support at the 18 and respect that line, then we have the potential for a play coming back to the upside. Now, we do want to keep an eye on this. If this is dropping down and this is starting to roll over, that's going to make a pullback on this time frame, on this daily with the rising 18 week underneath to a lot more attractive. All right. If it's a monster, so Powell talks tomorrow at Jackson Hole. If we get a monster red bar, this is going to pop. This is going to have a big move to the upside. It's probably, it's going to probably stay above the moving average. Then we know, yeah, we're getting oversold, but we've got to be a lot more careful about any kind of a pullback. It's very possible we do on the way down what we did on the way up, which is had a violence to the downside and then vertical move right through the moving average. It's possible we won't show any respect for the 18 and we'll come right back down through it. So the way I handle this kind of market when the volatility is up is I don't pre-guess, I don't chase, I look for entry. And if it never materializes, then I'm just watching the market sort of trade in a range. I'm not getting caught up in trying to play the overbought, oversold game. You can do that. You could be short here if you wanted to play that game and look for this to come down. You could certainly do that. You could have gotten long off this oversold, but let me just explain something. This got oversold. I'm going to show you where this got oversold. So here on this bar right here is where this moved into oversold territory, right? And then we had the monster gap down the following day. Okay. And if we go back and look at where it got overbought, it got overbought on this day. And then we went up for 4 or 5 straight days before it rolled down. So playing that overbought, oversold game is a little trickier without using a smaller time frame to trigger. I don't really like playing the overbought, oversold game. Just as soon as it gets there, get long. I think you still have to wait for the smaller time frames to help with that. You can do it that way if you want, but I would prefer to play with the bigger trends and look for bigger moves. So what I'm pointing out to you is if I'm looking for the next significant move, I think we need to respect the 18, right? We respected it and we got a nice move to the upside. Respected it, got a nice move to the upside. Respected it and then got a nice move to the downside. Since that time, we didn't respect it. Will we respect it here? That's the next key I think we need to watch. All right. Now, one of the things I'm going to do, so if you notice, I've got a slightly different look. I've got the monthly here, I've got the weekly here, daily here, hourly here, and then I've got another daily chart here with the RSI setup. I wanted to show this because I want to show you what I'm looking at and how I'm using the RSI during this period right now. So we've got still a pretty stable environment on the monthly to the upside, showing a pretty big tail right now. Still got some time left in the month, so it's a little early to make a call that we've definitely formed a tail, but it's certainly encouraging to see this rallying off the low. On the weekly, we've gotten green DI to come right back above. So I do want to show this. So if you notice what happened, red poked up and then it came right back down below green and below 25. Okay. Now green was in control through here. Once it got back above this red here, we were in control, stayed in control, and then green tried to take over and failed. So red failure means that green is taking over control again. We don't need more confirmation. Green is in control. We have reverse divergence here. Okay, and we've gotten a nice move off the low. So I moved this back to the positive side because green got back here and we had the reverse divergence set up. Okay, so I wanted to explain that. Now, if we go to the daily, again, this is kind of the key time frame right now. We had the ABC down and then the vertical move to the upside that causes the crossover. Do we get a pinch to form as this works its way back towards these moving averages? Can we pinch down? I think we can because there's a decent amount of separation between the MACD and its signal line, right? We might not be able to keep the green above 25, but as long as it stays above the red, I still think we have, a legitimate shot at making a higher low here. Now, sometimes we get a little sloppy. If this crisscrosses in red, clearly gets back in control, then we know we're still in a contraction phase. We know that, and that we don't need to be in a big hurry to play this. Is probably going to be a little bit more sloppy. So we want to keep an eye on that. The volatility has been really high, so it's possible we could come down below 25, and maybe these kiss, maybe it just barely overruns. But I'm just talking, make sure that if this is going to be negative, then red's going to have to come back up and take out this prior high. I think if we avoid that, then we do have the potential to look for an RSI buy signal on the hourly chart. So if this can come down here, on the daily chart. So if the red can hold, the 20 RSI can hold above 50, while the RSI 5 comes down. We already come down a lot in one day. If we can do that again, and RSI 20 hold, and then make a higher low from there, then we're in a pretty good position. Now, the hourly is in agreement with that because we showed a tremendous amount of strength to the upside, and now we're working our way back down. Now, it's very possible the MACD is going to overrun the zero line if we get an opposing trend pattern to develop, which might take place, might get this down to low. But as long as we're not showing a fierce amount of strength in the sellers, then I think we could be looking for an opposing trend pattern on the hourly. So we're just going to have to watch. I'm not guessing. I'm not going to give you any predictions and say, oh, you've got to buy it at 547 or 545, or I'm not going to do that. We just have to be smart about this and look for our entry pattern. If it doesn't materialize because it's too violent, then we're caught in a range and we need to be a lot more patient. If we do make a more orderly pullback towards the 18 and the 40, and we get this RSI signal to set up, then we're looking for a trigger on the hourly. So this is how we use multiple time frames to really increase our odds and not have to guess. All right, let me know if you have any questions, and we'll see you next time.